What's happening, fam? It's some day in the boot camp. I honestly can't remember which day it is, but today I'm going to stop you from being a total noob in these markets, and we're going to practically apply what we've learned. So specifically focusing on the entries right now, because that's honestly what it all comes down to, right? Is consistently applying your entry methods and what you learn to the markets. So I'm going to put you up, fam. I hope you guys pay attention. I'm going to run through my entries from last month and also just break down my good entries, my bad entries. Last month was probably one of my best trading months in the past 2 years. Now, I'm not just talking about money or profit or anything like that. I'm talking about my consistency that I had. And I really pride myself in the consistency I had last month. And only a word of advice that I can give to you, I guess, is get a routine that you can follow. So if you've got a 9 to 5 or if you've got a busy lifestyle, whatever it is, we've got some people with some crazy careers in the academy. Wherever you are, whatever you're doing, you gotta get a routine, man. Routine is the epiphany of being a successful and consistent trader. That's what I found, at least. When I was very strict on my routine, I said no to a lot of social stuff last month. My friends were a bit mad, but who cares? I mean, I couldn't care less. They'll get over it. And I caught that back, bro. And a lot of you guys did too. So we need to stop idolizing me, stop idolizing a lot of people, a lot of other traders out there. My goal here is to empower you. That's my number one objective, and it hasn't changed since day one. And let's backtrack a little bit. I want to say that I'm no professional, okay? I don't want to put a disclaimer up there, but you should only listen to me, not because I say so, because who cares if you listen to me? Don't listen to me. I don't care. If you find these videos entertaining, that's all good and well, but you gotta make it your worthwhile to watch these videos. And I can only presume why you're watching these videos is because of my experience in the markets. And like I said, I've been at this for 10 years right now. So I really hope at the very least you guys grab something out of this and that you guys learn something. So without further ado, let's get into the markets. I think we already went through the other trades. Let's look at the trade on EURUSD on the 21st of July. So 21st of July, not really going to talk too much about the red setup day, green setup day. I think we've spent more than enough time on that. So I want to really focus on the entries right now. So the overall thesis for me on this EURUSD trade was, of course, the higher time frame. But I need you to focus on the entry method that we had. So I got a 50 lot position opened on the EURUSD position. And my overall view on this was very plain and simple. And as I'm explaining these entries, you guys will get a grasp of just how simple this is. And that's what I need you to learn from today, is grab something that is really simple from these videos and just place heavy emphasis on the repetition, repetition, repetition. That's all I need you to do. Stop overthinking it, fam. Clearly what we saw Asia session opening up high with a bearish engulfing candle coming back down. That's after a follow through of the bullish day on the 17th of July. On the 20th of July, because that was a Friday, the 18th of July, we had the bullish day. Then on the 20th of July, we had the market opening with a move back down. But look at the market movement. It was very stagnant with its movement back up. So that was indicating to me that we had no volume. All of this is fancy talk, okay? It means nothing with my entry. I was just merely observing the market. So if you're writing notes down right now, don't even bother with this, okay? This is just fancy talk. This is just me observing the market movement. Pay attention to the entry at NY session. When we then moved on, we can see point number one, this is important, we broke the Asia session high. That's very, very important. So we broke the Asia session high, and then we started creating a range inside of London session. Now, the range was formed after we tested this high, and I'm a big fan of fake outs at the high. I mean, I don't know what you guys have picked up, but for me personally, man, I'm a big fan of fake outs. So whenever I see the market creating a high and it breaking that high with one candle only and not breaking that high of the candle, coming back down, man, I love that, because that's a massive indication for me. I cannot scientifically tell you guys why that happens. I'm going to be honest. Just with experience, I've seen that time and time again to be a big indication for me for a big move. And I love this, man. Whenever I see that, I almost see dollar signs because that's a very big indication to me. I guess you can say it's unfinished business at the top. So there's a lot of aggressive buyers being trapped, and then the market will push back down aggressively and then pushing back up to grab those orders. So what I saw here is exactly the epiphany of what I talked about. We had this bullish candle breaking through, but pay attention to the high of this candle. We did not break that high. The market came back down with one candle, came back up again, tested that high. Once again, this is fancy talk, doesn't mean anything. What I need you to focus on is the break of the Asia session high and then the fake out at the high of London. So we had that fake out right there, and then the market came back down, touched that low. So these are our interest points for now. We have that fake out, we had the low of London session test, and we had the successful break and close above Asia session. That's very important. That's what gave me the idea with regards to structure that we're most possibly going to move higher. So that's the focus point in this entry. We then saw the market push back up higher with NY session. And at this point, I was kind of like, okay, what's the average daily range of EURUSD or whichever pair I'm trading? Because I never want to be trapped up high. I mean, that's the trader's worst fear. So what I was paying attention to was, I must say, guys, I was a little bit afraid that we're going to reverse back down. So what gave me the indication that we're going to move back higher? And I want to revert to the previous day. So I'm going to zoom out a bit and you guys tell me what you see. We can clearly see we had an exhaustion zone test. So that's only why the market reversed like that. Well, to me at least, that's my opinion. I saw the market reverse, but it was just a retracement. It wasn't a full reverse and a break of structure to the downside. Let's go to the lower time frame and you guys can check out what I'm talking about. 5 minute. So on the 5 minute, you can see there's no clear break of structure. For me, a break of structure means a support zone or a break and then a clean range to the left. So this was our last zone of support, or well, resistance zone. Not resistance like the traders used to call it. It was the last zone of resistance before we can push back lower. And we tested that. So if the minute we broke that and we had a clean range to the left, I would have seen that as a break of structure. I always pay attention to a clean range to the left. Now, we already saw that we did not break structure. That's very important for me. And I saw that we tested the exhaustion area high of the day. But pay attention to the fact that there were no volume candles when we moved back down. So that's also very important. Once again, just fancy talk. Doesn't mean anything. What means something is these that are circled out. So focusing on the low of the exhaustion zone, and then we tested this high. Now I want to touch base on the things that really matter, and I want to talk about timing. Now we already distinguished that you get a y-axis and you get an x-axis. In trading, we get time and then you get price. Now there's a third axis, but we're not going to talk about that today. I was focusing on the time session. Now every session you get a time zone that we call a golden hour. Now when it's daylight savings time, of course it's going to be different, but this trade was taken in golden hour, or people like to call it the COMEX open. If you're a new trader, don't get confused with that. Or when NYSE session opens. Now that's basically, let's say you're a big shopper and you know when your favorite shop is opening, and then everybody's going to rush into the entrance because they could not wait for it to open. They were just so damn excited. That's pretty much my best explanation that I can have here, guys. It's the shop opens, so everyone is rushing in. You get overnight orders hitting the market when the session opens, or you just get overnight holders stacking on their positions as soon as the market opens in their favor. So there's a bunch of different variables, but what it all comes down to, volume kicks in at specific times. I need you guys to understand that. It doesn't change trend. There's specific times. Like back in the day, think of it right now. Let's take a break right here, okay? You were trading on the floor. That's why we have, I'm going to give you guys a golden nugget, we have a last 10 minute of the hour reversal. That's actually something that we look at with regards to candlestick maturity. But let's say the year is 1992, you're trading at an exchange, you're an actual trader at the pit, and bro, you have a certain work hour. You're not going to stay up until 12 at night. You've got to go to your family. So you're not going to be trading. Let's say your desk right now, your job, your desk, They used to call it a desk. There were like 2 or 3 traders right there at the desk, and that specific desk would focus on CHF futures or Japanese yen futures, or it depends, like people would assign different contracts. Your goal was to trade that pair or that instrument, that pair, okay? And for the most part, you had to go on lunch, bro. You had to go to bathroom breaks. That's a little bit too practical. You have to get your times where you were spiking the volume up or the volume was spiking down. There were different times. The market is not going to do this the whole time, okay? There's certain times when the market, let's say, reacts, okay, off from activities. So call it a reaction off from the activities. That's very important. So that was my main driving point for this trade idea, was a buy in NY session golden hour. And we can clearly see that as soon as the NY session golden hour started at 9 a.m., we had rejection right here. That was my first giveaway. The second giveaway was, I need you to pay attention to this low and this low. Whoops. This low and this low. You can see that the one low closed higher than the other low. Is that not just a break of structure or a change of the trend on the lower time frame? Remember when I said the market is fractal? Okay, MC, whoa. By this point in the video, I really hope that you can all see the importance of putting everything in context. Can you imagine, like just think about this for a second. Can you imagine how freaking lethal you're going to be if you look at the day count, you look at structure with regards to the daily candlesticks, you look at the smaller daily levels that I taught you, you look at the entries, you look at the exits, and you look at the right time to trade? Bro, can you just think about it for a second? Can you just think about how lethal you're going to become? I mean, guys, if there was a mic right here, I would drop it, bro, because I'm so damn excited to see how dangerous you're going to become. I'm so damn excited to see how you're going to prove everyone that told you will not make it, actually prove them wrong. Just really fathom this right now. The timing, with the daily count, with the entries and exits, and man, you don't even know half of what I'm available to show you yet. But can you imagine just with this right now, how dangerous you're going to become? Let's get into it, man. So, golden hour, we saw the reversal and we saw the higher low. That's one of the things we look at. Let me go to a lower time frame and you can see what I'm talking about. Let's go to 1 minute if it allows me to. Damn. Okay. 1 minute, look at structure right here. We had this low, 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 low. I'm sounding like Flow Rider right here. And then we have equal lows. But pay attention to this low, okay? And then if that wasn't convincing enough, this bullish candle right here, you can see that we have equal lows formed over there. So that's very important to know. That's a structure change on the lower time frame. Let's go back to a 15-minute time frame. What really gave it away was this 3 candle variation for me, knowing that we closed at the high of this bearish candle. So then my pending order was around about here. And then at this point I was, you can just say, you bet your sweet ass, I was prepared to enter buys over here. I was just waiting for the confirmation. I pretty much always trade with pending orders if I can, because I'd like for the market to confirm the confirmation. So yeah, when we got that confirmation, the wicks pointing upwards with that bullish candle, that was enough for me to say, bye bye daddy, let's go up. So by the time that we hit our exhaustion area at the top, we had an exhaustion area over here. I was very skeptical based on that movement, because of course I cannot target these lows right here, because it's going to be big ass zone. So what I did was, and this is a very unique scenario, I was waiting for my first bearish candle. I got out a little bit late, and then for that bearish candle to break that low, and then I was anticipating some movement to the downside. So that was pretty much that trade right there. Going on to GBPUSD on the 22nd. So GBPUSD, you guys can already see that this is pretty much already the same scenario, right? Trend was pointing upwards. That's okay. I'm not even going to look at the higher time frame. But now let's focus on the lower time frame detail. So on the lower time frame detail, we can see we had Asia session low. That's very important. Did we break and close below Asia session low? No, we did not. So what did I say about fake outs? Remember, I said fake outs and rejection is probably the most important thing for me. I really like that. I'm a sucker for that. So we saw the rejection at the low of Asia session. I did not buy there. I see that as a little bit of an arrogance entry. That's just my opinion. That just means you cannot wait. I mean, each to their own, but that's just why I did not enter there. So I saw the test of the low and then the market pushing back up. So you can kind of see this as a missed entry, or I don't really care. But really what gave it away was a test, the creation of the NY session low again, and then pay attention to detail, guys. The NY session golden hour again. We saw reversal, and then that's when volume kicked in post NY session or at the start of NYSE session. So timing is very important. With the start of the golden hour, I saw we were consolidating. So what I literally did is I drew a high and I drew a low. The market rejected that low, and pay attention to the lows of the wicks again. We can see this was a wick, but this one was a lower wick, and then this one was a much lower wick. But look at the volume right here. This is part of volume spread analysis, which is a very, very broad term, but this is a little bit more refined, and you're looking at the wicks forming to the top. This is just part of the confirmation that I was looking at. This is an engulfing variation, 1 candle, 2 candle, closing above the bearish candle, entry, pending order at the top of that high. Remember what I said about 10 points, and then ultimately 0 drawdown and exited at a near exhaustion area. So same pattern, same thing every damn day, man. It all comes down to repetition, repetition, repetition. Yeah, it might come into different variations. If it was the same thing every day, I mean, the markets would not exist anymore. Thank goodness it's not the same thing any day. Otherwise, you guys would be taking all the money and leaving nothing left for the other guys. So we gotta give the other guys a chance, but not the mad fam. I know you guys are hungry. I know you guys are going to be killing it right now. Let's give the smaller boys some time to play around. We wait around like a sniper, and we take our entries and we make money hand over fist, baby. I hope you guys enjoyed this. Leave a like, leave a comment. Otherwise, I don't know if you guys like this style, man. And then we can continue keeping it going. Love you guys. Stay blessed. Let's flip that damn switch, man.